Hey guys, and thanks for stopping on in for today's video where I want to walk you through what I recommend in terms of investing in mutual funds for your retirement. And essentially what I'm going to do is just walk you through and give you the rationale of what I do myself in terms of investing in my retirement. Now, I don't have a financial advisor, and I definitely recommend it if you can avoid having a financial advisor. It's going to benefit you in the long run if you can take control of your own retirement investing, because if you don't have a financial advisor, they're not taking out the expenses and fees on a yearly basis, which is going to leave you a larger nest egg that can compound interest annually, and you're going to have a much larger nest egg by the time you get to retirement if you can avoid going the financial advisor route. And if you're going to do this, you're going to have a brokerage account yourself. I'll link this article down in the video description. It's thenerdwallet.com, their summary of the 9 best online stockbrokers for trading stock. And me personally, I have my retirement account through E-Trade, but you can do some research if you want on all of these different options. Again, I'll link this NerdWallet article down in the video description if you're looking for different research material on what online broker that you might want to go with. But in terms of the mutual fund that I recommend that you invest in for retirement are these balanced funds that we get from the Vanguard. And the reason why I recommend the Vanguard is because they have extremely low expense ratios. And essentially, the lower expense ratio you can get, the better off you're going to be at the end of the day, because this is basically the money that the mutual fund takes out of your account on a yearly basis, basically the cost to manage the fund. And these lower managed funds, the ones that use ETFs, they're going to have much lower expense ratios, and the Vanguard is pretty much the gold standard in most situations in terms of having extremely low expense ratios and very well balanced and diversified assets within these funds. So you can see here, they have all these different target retirement dates, and they're spaced 5 years apart. So for instance, if your target retirement is 2065 or 2015, it's going to be a very different mix in terms of risk exposure. And as this goes through the years, it's going to automatically adjust the risk exposure as you get closer and closer to retirement. So I'm going to open up the Target Retirement 2015 and the Target Retirement 2065 so you can see the difference in terms of the risk exposure of these well-diversified retirement mutual funds. So starting off here, this is the 2015 retirement fund. So it's going to be a lot more secure and safer investments. And we can see the number one holding is the United States Bond Market Fund at 34% of the holdings. And then below that, you have the United States Stock Market Index Fund at 23%, the International Bond Index at 15%, the International Stock Index at around 15%, and then short-term inflation-protected securities. This is an extremely safe ETF inside this mutual fund at 13 percentage points. So keep note of these numbers so you can see the difference between the 2019 target retirement and then now going over to the 2065. You can see the number one holding is the U.S. stock market index fund, the largest holding here at 54%, International Stock Index at 36%, and then the United States Bond holdings at 7%, International Bond Index at 3%, and then nothing in terms of that short-term inflation-protected securities index funds. And so you can see quite a big difference. Obviously, the stock market, you're going to have a higher risk, but also higher potential return, and you want this at the beginning stages as you're starting to invest, while as you get into retirement, you're going to want to have less exposure overall to the stock market, and you can see that in this 2015 target retirement date where that U.S. stock market exposure here is at 23% as opposed to the 54% that it is in the 2065 fund. And again, like I said, this is going to automatically adjust throughout the years and become a safer investment as you get closer to retirement as opposed to when you're just getting started out. And again, I really love what the Vanguard does in terms of the diversification of their different ETFs that they put inside of these mutual funds and their gold standard, most cases industry leading, very low expense ratios. That's going to leave you with a larger nest egg at the end of the day. Me personally, I am invested in Target Retirement 2050 with VFIFX, and I've been very pleased with the results and return that I've been getting ever since I started investing in this particular mutual fund. And again, if you can take control of your own retirement, don't have a financial advisor, you're going to save yourself a ton of money in the long run. And with that extra money in your account, it's going to compound interest every single year. You're going to have a larger nest egg, and quite significantly so by the time you actually reach retirement. And again, guys, I'll link down in the video description the article from thenerdwallet.com that has a summary of the 9 best online brokers. Once you get an account with one of these brokers, you can set up your retirement account and then start investing in one of these target retirement funds from the Vanguard. And right now, essentially what I have set up is a retirement account with E-Trade, and I max out my Roth IRA, for instance, every single year. I highly recommend doing that because it's a tax benefit to you to max out that IRA within your retirement account, and you can set that up on all these different stockbroker accounts that you can create on all these different websites. So I really hope this was helpful in terms of giving you some advice on where to go and what you can be doing in terms of investing into your future for your retirement. So I appreciate you guys stopping on in, and consider subscribing to my YouTube channel. I hope to see you guys back here for future videos.